What's up, everybody? Welcome aboard to Trading Live with Bubba. And of course, we heard yesterday that the economy is slowing. What a shock. You got the jobs number tomorrow. They're begging for the rate cut still. And I would assume that a bad jobs number tomorrow, which would be equate to yesterday's ADP job number, you could see some heavy selling in this. Some heavy rally in this market, because they're begging for that rate cut. And of course, it was supposed to be in March. Now it's maybe July. I don't see it. And if we get a rate cut, I think that would be a pretty bad sign for the overall economy. But that's enough of commentary. Let's see what's going on here. Markets are kind of quiet, and they're, they've had some big rallies. They've had some hard sells. But basically, I would expect that we're going to end up somewhere near the flat line today. I don't see a lot of overall action because, again, you have a lot of eyes will be waiting for that number tomorrow. But as we look right here, you can see that the Dow, although higher, has kind of consolidated down here along the bottoms. The Nasdaq's been pretty wild back and forth. Potentially, let's see here, where we at here. Not much to really trade here. So we'll go back and look at our charts, and we'll come back. We'll keep an eye on it. We can kind of tell by watching what's going on. So let's take a look at our usual list of suspects and how we talked about them the other day. And of course, I did warn the other day that I wouldn't want to get too aggressive because of the jobs number coming out tomorrow, because you could get a big move. But certainly Apple is still at that level where we'd like to potentially sell it. And I'd like to do it through selling call spreads, but I think prudence here is the best medicine, and I think it's best to wait. I don't think that you want to get too overly involved here, because we could go anywhere. You could be right, you could be wrong, and I just think that when you're waiting for probably in 2024 the biggest announcement, and it's not because it's a big deal, because we know the jobs number is BS anyways, right? Because they revise them the following month. But I think it's a big deal because of how the street's going to react to this number. Now, we could look based on the rally this week. We could look at the fact that, well, they've already priced in it's going to be. So no matter what the number is, the markets go down. I think it's just sometimes better to trade with more caution. Volumes are still very light. But so Apple, if I were going to do anything, I'd be looking to sell call spreads. Amazon has come back. Remember, we said the other day, you might want to look at selling put spreads. Again, we came right back to the mean here. So we're kind of in the middle of nowhere. We are at a little bit of resistance. I would not make a trade here, but if it would be, I would be looking to sell call spreads here. Coin continues to break to the upside here. I would certainly look at selling call spreads. But again, I give you the same warning, the same disclosure. I think you're probably better off waiting till after the jobs number before building too big of a position. If you want to take a half a position on some of these, I have no problem. Again, I have no problem with any of it. I just think that you have to understand what can happen, and you're basically playing a coin flip as to what direction the markets are going to go after the number comes out. Meta continues to be, well, actually, I'm sorry. It did just break out of that tight little range. Remember, we said the other day, it's going to break one way or the other. We didn't know which way. We didn't make a prediction. We said, wait and see. So now you've broken the upside. You are now overbought. Again, the same disclosure, but certainly if I'm going to do anything here, I'm going to sell into the strength, because it is overbought. And from a mathematical standpoint, you should expect some mean retracement or some mean reversion. Okay. Google up towards the upper end, same thing. So you're seeing a lot, and that kind of goes, that's kind of consistent with the rally. Let's just switch back and see if there's anything that we can do from a day trading perspective. Crude is something you look at, but really, again, I don't like to make exceptions when I'm not getting enough trades. I make exceptions. I become more aggressive when I'm getting a lot of trades, because I can overcome a bad trade. If I'm going to stake my entire day on crude oil here, it's close, but I'm going to pass it. Again, I think you have to learn the patience and discipline in the business to keep yourself out of trouble. So let's go back and see. We'll come back. We'll be watching. IWM, India Whiskey Michael, kind of at the lower end, under some pressure today. certainly I would have no problem here if you wanted to sell some put spreads for today. Remember, today doesn't apply to tomorrow. And if I'm right, then I think that you're probably going to, even though they're down right now, I think there's a better chance that we're going to close somewhere near even, barring some major news announcement that comes out of nowhere. But from what we can expect, I would expect this to be probably, at least hold here, which means, again, remember, I don't need it to go up. I just need it not to go down. And I would say you're probably potentially close to the lows of the day, would be a very good shot. And again, it's a one-day trade. It's what time is it? It's a 4-hour trade. Okay. Moderna, okay, came all the way down, right? The other day we said down to the mean, look for maybe a bounce. Right now, nothing really to do. Microsoft, really nothing to do. It's kind of still hovering in the middle. Okay. NVIDIA, again, this is just, I would personally, I'm staying out of this until Monday when they do the split, because you're getting buyers stepping into this to buy the split. Why they think they're getting a bonus, I have no idea, but it's totally overbought. It should totally be sold. But again, I ask you, why would, excuse me, why would you want to be involved? Okay. The Qs, all right. The Qs, I would certainly sell premium today. In fact, I might do that right now. Okay. What does it really, does really mean reversion effective for pair trading? It appears really that simple. It does, but remember, okay, it's a great question. Mean reversion, the mean will continue. Like if this continues to go higher, let's say I sold it here. Okay. If we get a big rally, the mean's going to go here. So even if I go, mean reversion could be higher than where I sold it. Okay. This is a mathematical formula that was written by John Bollinger, hence the Bollinger Bands, who used to be on FNN, Financial News Network, prior to CNBC. So, but again, it's certainly a reasonable expectation that you should be able to make a profit from overbought or oversold conditions by fading that position. But you also have to make sure that you have an exit point to get out. Okay. That's something you got to always remember, that you have to have an exit. All right. So, but certainly by doing spreads, that gives you the exit built in. And I'm going to look right now while I'm sitting here, okay, at the Qs and see if there's anything that I can do. I'll give you a trade if it's available. Okay, so there's 6. We're trading at 464. Okay, so 1, 2, 3, 1, 2, 3, 4, 5. All right, I'm gonna sell the 455, 456 call spread for 30 cents. Okay. I may not get it, but that's where I'm working it right now. I've already entered my order. 456, 455, 456 for 30 cents. It's a little less than I like, but I would suspect that this will have some pullback here. Square, as we said the other day, remember, look for a little bit of a bounce. Well, here it is. It's now retracing. And here, for the question before, here's the example. You see the mean has continued to fall. Okay. As the stock had continued to fall, so would the mean. Okay. The SPY also overbought. So why don't we take a look at this as well? At least we'll do something today. Maybe we can make some money here. Let's see what the SPY is. SPY is trading at 534.68. Okay. 1, 2, 3, 4, 5. Okay. I'm going to take a little bit more exposure and I'm going to get a little bit more credit for it. Okay. I'm going to sell the 535, 536. Okay. It's really close. But again, I'm getting 40 cents for that trade. And I've got to 535.40 before I start to lose money. Okay. So I've got a few of those on, trying to capitalize, make a little cash here. And of course, Tesla is in that same pattern that we watched Meta. Okay. Really nothing going on. Win continues to work its way lower. Certainly you'd want to start to look to potentially sell some put spreads down here. And Zoom. Oops, wrong one. Zoom. Right at the mean. Again, as you can see, it bounced right off the oversold conditions. So that's something that you're watching for. And again, nothing is 100%. Okay. But what you're always trying to do is you're trying to build in probability to the trades that you're making. Okay. And, again, this is the same as what we do on a very short-term basis. We're looking for the same type of action. Okay. but we're not getting enough volume. So this trade that we like to day trade is much more based on price and volume together. And you can see that there's very little volume right now in play in this market. And again, I am not going to force. We traded earlier this morning with my members. We had 3 trades. There were 3 winners, but they were very challenging trades although we made money, but they were not easy. And again, not that trading is easy, but when the setups come, either they should be profitable pretty quickly, or they're going to be a loser. You're going to be able to manage them, but we're not getting enough reaction. We're not getting, if you ever had a shotgun, we're not getting enough kick off the fire. So I think it's just something that you have to be patient enough to wait for it. I think too many of us try to force action that is not really action. And I think that's important to understand. Certainly the notes are a potential, but again, their volume is way too light for me to think about getting involved. Gold's volume is way too light. I mean, you're seeing numbers. Now, just for example, when I'm trading at the open, I won't trade the Dow without a minimum of 5,000 contracts. Right now you're at about 800. Okay. The Russell I won't trade without 5,000. The crude I won't trade without 1,500 to 2,000. The notes or bonds I won't trade without 40,000. Okay. Look at the numbers. So you can see how weak the actual activity is, which even leads more to believing that we're going to get to probably back close to even today. I mean, this markets could certainly even rally, but overall, I don't think you're going to have a massive sell-off into today because of the light volume. Dull markets themselves tend to drift to the upside. Okay, the markets have a predisposition to go higher, except when they go lower. But again, for the most part, that's why the equities in history have rallied an average of 8.5% year over year. Okay, but again, we don't have a lot of activity, so there's not really a lot for us to do. But one of the things that you can always learn is the ability to be patient, and you can kind of study the charts. I mean, certainly, if I were watching this part, it'd be one I go, oh, what's the volume? Well, it's not enough for me to get involved. Okay. Now, to me, the easier thing to do is to mark your volume levels of where you want to see it, because then you don't have to look at the chart. And if you don't look at the chart, then maybe you won't see that mirage that doesn't exist that forces you into a bad trade. Okay. That's always something that's important to understand, that we, as traders, is when we're active, we like to see things that don't always exist. Okay. Because we're sitting there, so we want to trade. We want to make money. Well, just remember this: no trade is also a potential of making money. Okay. Not trading is making a decision, is making a trade. No trade is a trade if you're making that decision. So, as we're watching, you can see that we're getting a little bit of a rally, not a total shock. Okay. But we're also not seeing any activity behind it. So there's no emotion. There's no drive. There's nobody trying to really drive these markets higher, which just tells you that you should be much more careful. And I think this is something that we have to always be a part of, is to be on the err to the side of caution. Okay, now suddenly we're getting a little bit of activity in crude. So now crude has gone through the highest volume bar of the day and is now at about 2,500 contracts out of nowhere. So now we're going to go look at crude. Okay, we're ready to go ahead and jump in early and trade this if it gives us the opportunity. And of course, our stop's going to be at the 75.72. Should we get a trade? Now we don't have one yet, but 75.72 is where we would be a seller a buyer if we do get short, because we're only going to the short side right now. Okay. And again, we don't have a trade yet, but we could get one. So let's see what happens. Okay. I don't think we'll get it here, but you never know. Okay. So we do not have a trade yet. We got to wait. Okay. Okay, so it looks like we're going to get the trade here. We want to be a seller at 75.02 or below. No trade yet. So again, we wait. We wait until it gives us the opportunity. Our stop is going to change potentially to the higher side. Anything else going on while this action is happening? Nope. Okay. So we're just waiting for crude. Okay. Okie doke. That's what we're waiting for. We're waiting for crude. And it continues to go higher. So our stop is now changing. Our stop is now 75.80, but we have no trade. We're not in yet. Okay. We're still waiting for our entry. And this is where you have to have patience and wait for the entry. And if you don't get the entry, then you don't get the entry. Okay. Eventually it'll come. Okay. And as far as we're concerned, the farther it goes in this direction, the happier we are, because we know we're going to sell it. So wouldn't you rather sell it a lot higher? Okay. That's the whole key. So we're waiting, and our new stop is going to be 72.85. But we still don't have a trade. So we're still watching and waiting. And is there anything else? While we're watching and waiting, is there anything else of note? No, there's not. You can see that's the only one that stands out by itself. Okay. So we continue to wait. We get another minute to wait, and we'll see. So in the meantime, again, this is where you exercise as a patient. What's your favorite way to trade? Strict stop loss, strict stop loss, trailing stop. I don't use stop limit. I use a straight stop. Okay, because I don't want the limit to screw me. Okay, and I manage a trade as it goes up. I always eventually get stopped out, but the stop out will come. Like this morning, I got stopped out of a crude trade with a 60 tick profit. Okay. I will manage the stop based on the chart. Once I'm in, I will then use the chart and use support or resistance levels depending on what side I'm on to get in. But I prefer this type of trading when I have the opportunity. But of course, right now there hasn't been many opportunities lately. So I have to sit back and relax and wait. And of course, this is the kind of action that I'd be out on the golf course already if I wasn't here. And that's where I'll be very shortly after we're done. I'll be headed to the golf course because I don't see much action happening in this market today. I think that you're much better off. And again, I think it's easier to many times take a pass on day trading. I mean, I do have positions, don't get me wrong. I do carry positions. And of course, those spreads that I just put on are in play. But from a day trading standpoint, I don't see the opportunity. So to me, it's easier to walk away. Okay. And not be involved. Okay. Right now, we'd want to be a seller at about 75.18 or below, but it doesn't look like it's going to get there either. And now we're getting to a point where we're getting close on our own time together. So obviously, if the trade doesn't trigger between now and then we won't have one. If it does trigger, you'll have to manage it on yourself. So if you're not comfortable managing it on yourself, then don't take it. Okay. As you know, I will report in on Tuesday how the trade did. If when it comes, but it doesn't appear, we continue to climb higher. Okay. And we're trying to sell it. We need a signal, which is a red bar to sell it. Okay. Right now, I wouldn't want to be a seller at 75.21 or below, and it continues to go higher. So there's not much for me to do with this right now because I'm not going to sell it while it's still going up. It hasn't shown me that it has any desire to reverse direction. Okay. So that's something that you have to pay attention to and keep an eye on at all times. So it appears that there'll be no trade here. So let's see. We'll see. In the meantime, to all of you, have a great weekend. Remember, I do a daily update called the Market 120 every day. And of course, I'll see you all back here on Tuesday. Have a great weekend, everybody. We'll see you later.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.